Okay, quick Monday morning radar update. A little bit mixed out there this morning. Mondays tend to take a little bit of time to wake up, especially in a grindy market like we've had recently. So gap up in the small caps, that's nice to see. Down in the 250, not sure what that is. Maybe it's a weighting of a stock in there. I haven't looked. Gap down in the DAX, gap's filled already, and the FTSE 100 is holding up quite strong there. So let me just jump straight into. We'll just have a look at that. That inflection point on the dollar we've been monitoring. The dollar's been going down for some time, and now it's finding a little bit of strength here. So, we want to see how this plays out up here, because so far the miners, the commodity stocks, haven't liked it. Now, what happens if the commodity stocks become happy with it trading strongly and they start to do okay again? Well, then I would sort of take notice in another kind of way. I would say, well, maybe the miners, aren't that worried about the dollar at the moment, and the funny noise behind me is Henry the dog deciding to wash himself. So back to the job in hand, just in case you thought it was me. So always take notice when you see markets what are basically opposite to each other on each side of the sort of seesaw. When you start to see the whole sector ignore the dollar, it's just another way to view it. For those who come to my screening sessions, we always believe in what we see in the screens, and the screens are very good at highlighting what is ready to move. So, that's a little zone of interest on the dollar. Let's move forward from that. I'm just going to jump straight into the volume screens and just see what's moving today. It is 20 past 10. We should have traded 27% to be on average volume. Just quickly fly through these. Investment trusts have been filling the screens, not filling, but leading. A lot of investment trusts have been in the screens for the last few sessions. Individual stocks, not so much. So let me just buzz through the investment trusts, see what's in here. Galliford Try again, Hotel Chocolate again. KETL, obviously a little bit more of a bumbly stock this. We had a swing set up from this little base over here, and we thought in these what we call sloths, a little bit boring in the sectors and that sometimes. It's better to get a reward to risk entry, and not so sure if this is going to be the new left side of a base. It's pretty normal action, just from my point of view. In fact, if you've listened to the Twin Peaks podcast, I saw it here, I saw it here, I saw it here. I didn't take any of these because I was invested in other things. Why would I look at it now? I'm trying to concentrate on my zone where I'm going to be riding fresh trends, is basically. So if it gets to where Kettle is now, I'm already running a good winner, is basically the thinking behind that. I'm just going to have to check again the volume. It is 10:20. We should have traded 27. Yeah, there's a lot running in the small caps today. So TRT, first retrace. Zytronic. what was that other one? Clark. Yeah, this is kind of a choppy one. Obviously, we've had a base on it and a first retrace already. Zytronic, it's a lose less scenario from what I can see in ShareScope. This is a return to profit, apparently, in the forecast. Let me just buzz through these. There's a few metals and minings ones in here, so that there you go. Talking about if metals start to ignore the dollar. Zephyr Energy's in there. But, you know, one day does not make a sector move, does it? James Latham. So obviously you can see the sort of entry areas we kind of focus on there. I've got no forward on this, so I have absolutely no opinion really. SAG has been going for some time as well. I didn't have any cash spare to take that one at the time. Reverse volatility base on there. If you want to know what that is, have a look, have a read of the ShareScope tutorials. So the oil stocks are doing okay again, aren't they? Let's just move forward through these and see what's in there. No loss making, lose more scenario on this one. SAR, this is a lose more scenario as well, even though the price doesn't really care. Lose less, no forward on that one. Return to profit, return to growth. Scenic, same. A quicksand, a bumbling stock, this one. Same, return to profit, return to growth. Pre-tax, I will say on that. As with all these stocks. Cyan, obviously been on its journey for some time. It's a lose less scenario as well. I can see the turnover ticking up, probably decelerating, but it had a huge tick up towards last year's posted 2.5 to 6.4 to 9.3 in that. Air Partners tick down in the forward numbers on this one, so it kind of doesn't fit what I trade towards, apart from turnovers ticking up very slightly. Moving on, return to profit, return to growth. So quick, we did visit a position in those screens what I've taken this morning, so obviously not to pump my own stock in the public. I didn't talk about it, so I've dropped that in the chat group. Higher risk, I have a position. Okay.